Good afternoon, and thank you for joining us for a Tax Practitioners Board webinar. My name's Julie Shaw, and I'm hosting today's session. Today, I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their connection to land, waters, and community. I would like to pay my respect to them and their cultures and elders, past and present. To begin, I just have a couple of quick housekeeping messages. First of all, if you would like to access today's slides, you can visit our webinar resources hub and go to tpb.gov.au/webinar-hubs, and we'll also email you a copy of the slides following the webinar today. And today's webinar does count towards your continuing professional education or CPE, and you can claim 1 hour for attending. Just in relation to claiming your CPE, we will issue an attendance certificate to those of you that are staying online for the webinar today. So let's have a look at what we're covering today. So in today's webinar, we'll be providing an overview of recent changes to the Tax Agent Services Act 2009, or Tasa for short. We will explain the draft guidance on 2 new code items related to disqualified entities. We'll also go through a few scenarios and we'll dedicate some time at the end of the webinar to answering your questions. So in that regard, we have Daniel and Nadia from our policy and legislations team joining us today. So they'll be answering your questions as we go through the webinar today. So if you would like to submit them, just do that via the Q&A. Which you'll find located at the bottom of your screen. All you need to do is just hover your mouse over the screen and a range of icons will appear for you there. You can also use the chat function to speak with other participants, but I will just note here that we're not monitoring the chat very closely throughout the presentation. So if you do need a response from us, just be sure to put that in the Q&A. So now, just before we begin, I'd like to introduce our speakers for today. We have TPB Chair, Peter DeCure, and Assistant Secretary, Jeanette Liu. Welcome to you both, and I'll just hand over to Peter now to start the presentation. Thanks, everybody.
And welcome everybody. It's good to be with you. As you're aware, the government has made some changes to the Tax Agent Services Act of 2009, and we'll refer to that today as the Tasa for short. The passage of the Treasury Laws Amendment Bill 2023 number 1, TLAD number 1, and the introduction of Treasury Laws Amendment Bill Tax Accountability and Fairness 2023 mark important milestones for tax regulation in Australia. This is the first legislative step to implement the first tranche of recommendations from the James Review of 2009 and will help to ensure that our legislative framework for the TPB is fit for purpose. These changes will commence in 2024 and include expanding the Code of Professional Conduct, or Code, to prevent tax practitioners from employing or using the services of a disqualified entity without the approval of the TPB. It will also prevent tax practitioners from entering into certain arrangements with a disqualified entity. The changes will give the Minister the ability to expand the code and to include additional obligations that tax practitioners must comply with to address emerging or existing behavioural risks and practices within the profession. We'll be moving to an annual registration cycle instead of a 3-year cycle. There will be self-reporting obligations so that tax practitioners must notify us in writing if they have breached the Code of Conduct in a significant way. There will be obligations to report other tax practitioners by notifying the TPB or a recognised professional association in writing if another tax practitioner has breached the code and that breach is a significant breach of the code. We'll be updating the objects clause of the Tasa to recognise its role in supporting public trust and confidence in the integrity of the tax profession and the tax system. We'll be updating and modernising the Tasa to recognise its role in supporting public trust and confidence in the integrity of the tax system. We'll be enhancing the TPB's financial independence and allowing a separate funding for specified purposes. Our financial independence will be enhanced by establishing a special account for the TPB for its operations and for funding special purposes. Finally, we will ensure board members who are appointed to the TPB meet the new definition of community representatives. These changes are all intended to increase our effectiveness and independence and to enhance community confidence in the integrity of the profession, the tax system, and the TPB. We've released guidance on our website to help you understand the new laws and how they will operate. We've also published draft information sheets which provide guidance to practitioners on how to comply with new code items 15 and 16. We invite you all to make submissions if you have any feedback. The consultation period closes on 16 February 2024 and has been deliberately extended to allow time to make the consultation representations as well as enjoy the holiday period. Your submissions will be considered prior to the finalising of any of the information sheets in 2024. I would like to point out that we do recognise that our guidance on these new applications will not be finalised until after 1 January 2024. So that in mind, I'd like to reassure you that we will consider any matters on a case-by-case basis and will ensure that we make pragmatic decisions in the transition period to the new rules. With that, I'd like now to hand over to Jeanette Liu to deal with some of these changes in more detail. Thanks, Jeanette.
Great, thanks for that, Peter, and hi everyone. Thanks for joining us today. We really appreciate you taking the time out. I know, we're in the week just before Christmas. Everyone is very, very busy, and we're really grateful. We've got nearly 2,000 participants online at the moment, and we were really keen to come out to tax practitioners to explain the board's preliminary views as to how these two new code items could operate. And unfortunately, the legislation only got passage at the very end of November. So we've got a very short window to have a chat to you about our thinking before these changes do kick in on the 1st of January 2024. So look, before I get into the two code items and talk about what the board's current thinking is, it's probably useful that we provide a little bit of context for the group. So some of you might recall back in 2019, there was a James review which was conducted. And one of the issues that Keith James had come across, and in particular he was very concerned about, was that there was insufficient internal governance practices in place. And what that meant was that tax practitioners were actually using people to provide services on their behalf that weren't appropriately qualified, educated, or had the right ethics. So while these new code items are technically obligations, I'm hoping that by the end of today's session, you'll see these as a real opportunity for us to make sure that we enhance this and strengthen the integrity of the profession that you operate within, and we keep our road operators. And I think, Peter, you'll recall this. You were part of a panel session a couple of weeks ago, and when you raised this issue around disqualified entities, you actually received a bit of a round of applause. So, I hope that you'll view today's session and these obligations in that light as well. So maybe before again, just one last comment before we get into the specifics around these code items, is that extending on what Peter said earlier, the board is very committed to taking a pragmatic approach in how we apply these new code items. And we'll talk a little bit more in a moment around some of the transitional arrangements that are in place that will give you a bit of time to start working out what these obligations are and how you will comply with them. So let's move on now and get into the nuts and bolts of these two guidance products. So as we've just mentioned, we've just released this guidance, and Suzanne, if you wouldn't mind moving to the next slide, thank you. So we've just released these two guidance products. They're literally fresh, hot off the presses, 24 hours. So if we look first at code item 15, what this requires is that tax practitioners are not able to employ or use the services of a disqualified entity to provide tax services on their behalf. These prohibitions exist where the tax practitioner knows or ought to have known that the entity they're looking at engaging or have engaged is a disqualified entity, and the TPB has not given them approval to actually use or employ those entities to provide those services on their behalf. Now, we've only got a few dot points on that slide there, but there are a lot of really important phrases that we probably should go through in a bit of detail. So we might move on to the next slide to go through each one of those key phrases. So the first key phrase that we have is around employing or using the services of an entity. Now, the definition of an entity is quite broad. It includes people that are employees, associates, contractors, as well as those that might share in revenue or income that you might receive from providing tax agent services. So that's a very broad definition of what is an entity. And it's important though to recognise really upfront that it doesn't include those services that are what we call peripheral services. So people that might be providing admin support to you in your provision of tax agent services, they're not intended to be captured by this disqualified entity regime. The next phrase in the new Code Item 15 is about where services are being provided on your behalf. Where services are being provided on your behalf. Now, this next phrase, it's a fairly simple one, and it really reflects the definition that we already see in relation to an existing Code Item 7, which talks about competency of services. So in essence and quite simply, what it means is that it refers to individuals who are basically under your supervision and control. So look, this is probably where we're getting into the real meaty part of this new Code Item 15, and it equally applies when we talk about Code Item 16 in a moment. So when we're looking at who is a disqualified entity, first we look at the test, which says that they cannot be a registered tax agent or a BAS agent or registered with ASIC as a qualified tax relevant provider. So if someone is registered either with the TPB or ASIC in that regard, they by definition will never be a disqualified entity. The second limb, I guess I'll call it, of the disqualified entity definition is that you must have an entity. So as we mentioned before, this includes employees, associates, contractors, other entities, as well as those that are sharing in revenue of your practice. Now, the third element that has to be considered to determine if someone is a disqualified entity is that the entity must have an event, a certain event that's occurred in the last 5 years. And we might go through those events now in a bit more detail. So these are the disqualified entity events that it's worthwhile us going through and having a bit of a look at. So essentially, if an individual or an entity or a contractor meets one of these disqualified entity events in the last 5 years, they will be considered to be a disqualified entity for our purposes under the Tax Agent Services Act. Now, a lot of these concepts should not be new. You're probably subject to many of these when you look at whether or not you're a fit and proper person. But in essence, a disqualified entity event includes where you've been convicted of a serious offence or a serious taxation offence or an offence that involves fraud or dishonesty. It also includes being penalised for being a promoter of a tax exploitation scheme, or where you are marketing a product ruling that doesn't actually conform with what has been described. It also includes a situation where you have become an undischarged bankrupt or you've gone into external administration. So there's some sort of high-level events. And then if we take it down to the next level, these are more TPB-specific events that a tax practitioner will need to consider. And what you'll need to look at is whether or not the TPB has imposed a sanction on them for a breach of the code. That might include having their registration terminated, whether or not they've had a renewal or a registration rejected by the TPB, or they might have been found to be in breach of the Tasa otherwise. And an example there is if you're providing services as an unregistered preparer, for example. So it's quite a long list of events, and we're looking back 5 years, but hopefully a lot of this information you can easily be able to ascertain, mainly through the TPB's own public register. So we might move on then to the next elements under Code Item 15, And that's around that you must know, or reasonably to know, that you were engaging a disqualified entity. So now that you actually know who you can and cannot employ, let's look at what these characteristics actually mean in practice and how you verify those. So in our draft guidance, we've included a number of minimum steps that you'll need to assess for yourself to determine if you need to go further and make some further inquiries or seek TPB approval, for example. And the very, very first step you've got to do is to check the TPB's public register. That way you can see if someone's been registered with us, or alternatively, you'll check the ASIC's Financial Advisor Register. Now, once you've confirmed their status with either the TPB or ASIC, then what happens next will really depend upon the situation at a particular point in time. And that will depend upon whether or not we're talking about a point in time before you're employing someone. It might be once you've actually already employed them, or when you might be ceasing to use or employ that entity. So we might break that down a little bit further with some minimum steps guidance that the TPB has provided. So let's assume that we're looking at a point in time where you haven't yet engaged or aren't yet using this entity. So what you've got to do here to satisfy yourself that you've taken, that you didn't know, or you didn't ought reasonably to know, is that you need to have undertaken appropriate proof of identity inquiries. And we've got guidance on our website around what those checks might look like. It's also important for you to seek written confirmation from that entity that they aren't a disqualified entity, and one of those events that we spoke about earlier hasn't occurred in relation to them. So there's some steps there, minimum steps you've got to take before you engage someone. Now, if we take that a little bit further in this sort of point in time spectrum to a point where you've already employed someone and you're currently using them, what we're suggesting in our draft guidance is that you need to have a written contract in place to ensure two things. The first is that that entity that you're using or employing has a positive obligation to let you know if one of those disqualified entity events occur. And further, where they do notify you that they do become a disqualified entity, then you have an ability to cease engaging with them immediately. Now, that's subject to your obligations under contract and employment law, but the general principle in that written agreement is that they will notify you if an event occurs, and you'll have an ability to disengage them immediately. Now, the third sort of point in time scenario is where you're ceasing to use or employ a disqualified entity. So in this case, you've already made a decision that you're going to no longer use them. So for your own protection and ensuring that you comply with the code, what you need to do is make sure that you include or keep records of your discussions with that entity where they've explained to you that they're disqualified, or you've explained that they're disqualified, and there is an expectation that you are going to keep those records for a 5-year period after you've ceased to engage them. And this is really for your own protection if the TPB was to ask any questions about your compliance with this particular code item. So now that we've sort of gone through the steps that you need to undertake, let's talk about how you actually comply with code item 15. And yes, the board will determine that on a case-by-case basis, but it really will depend upon what situation you're currently in relation to that entity. Some of this overlaps with what I've just mentioned, but I think for completeness, we might just go through each one of the situations that we have on the slide. So the first situation is where you're looking at employing someone or using an entity, and you don't know what their disqualified entity status actually is. So in those cases, for your own security and safety, you need to make sure you undertake appropriate proof of identity checks. You also need to seek written confirmation from that person or that entity that they are not disqualified. And we also highly recommend that you do conduct a search of our register as well as a financial advisor register. Not only will that demonstrate if someone's registered or not registered with us or ASIC, but it'll also show their previous sanction history, even if they're no longer registered with us. So there's some initial steps that you need to take to comply with Code Item 15, where you're looking at engaging someone and you're unsure of their status. So the next situation that we have is where you are already employing or using an entity and you know that they are not a disqualified entity. So in this scenario, what you need to do is to make sure you've got a written contract in place that ensures that that entity notifies you if they trigger one of the disqualified entity limbs, and that again you're able to cease your engagement with them immediately. And again, if I could just caution, that's subject to your obligations under contract or employment law. So that's what you need to do, again, to protect yourself if you have a current engagement with someone and you know that they are not a disqualified entity. The third situation that we have on the slide is where you want to employ or use an entity that you know is actually disqualified. So in this case, what you need to do is to reach out to the TPB and seek our approval before you can actually engage them. So until that approval's come through, you should not be engaging them. And if you do, you might be in breach of this Code Item 15. So we'll move on to the next two and the last two situations. So our fourth situation we have is where you want to continue using an entity that you now know is disqualified. So similar to what we had mentioned before, you need to seek TPB approval immediately. And in this case, because you're already using them, you also have to immediately cease using their services until that approval has come through. And then the last one is situation 5. And look, this one is probably fairly common sense. You already have decided you're going to cease using someone who's notified you they're a disqualified entity, so you're not interested in seeking TPB approval. In that case, you've got to immediately cease using that entity in that situation. For those of you that are deciding whether or not, for those of you that have decided you want to engage a disqualified entity, then you need to come to the TPB and seek approval. And the processes that we have in place, we've been working quite busily behind the scenes to make that process as seamless as possible for you. So what you need to do is that you need to log into your My Profile account. This is where you go to renew your registration, find out if your details are up to date. You log into My Profile, and then there will be a disqualified entities declaration and consent form that you can complete. Now, in that form, you'll need to give the TPB certain information. So this includes a copy of that disqualified events declaration and consent form. You need to explain to the TPB why that entity is disqualified and what are the reasons behind that disqualification event occurring. You'll also need to look at or explain to the TPB what role you're proposing that entity will be performing when they're providing services on your behalf. And to the extent that it's relevant, we are after any information as to why you think they're appropriate to provide services on your behalf. So we after an explanation around their professionalism and their ethical conduct. And then it's up to you and available to you to provide us with any other additional information which might be relevant. So once you've given that, I guess I'll call it that story and explanation to the TPB, you'll submit that form through My Profile. And then once we get it, under our legislation, we have 60 days upon receipt to make a decision. There can be situations where that time frame is extended, but in order for that to occur, there has to be agreement between the TPB and yourself as the tax practitioner. It might be we're after more information, for example. Now, if we don't make that decision within 60 days or within the time that we've agreed to, the longer period of time that we've agreed to, then the application is deemed to be rejected. And in those cases, or any rejection, whether it's deemed or actual, you will have a right to appeal to the AAT to have that decision reviewed. So we're hoping that for those that are seeking approval, our online form will make it fairly seamless for you to go through that process, and hopefully pretty self-explanatory. Now, I might move on to have a look at code item 16 now, if I could. So this explanation, you'll probably be thankful for this. It won't be as long as the explanation for code item 15, and that's because there is a lot of crossover in concepts here. So under code item 16, this states that a tax practitioner must not provide tax agent services in connection with an arrangement with an entity that the practitioner knows or ought reasonably to know is a disqualified entity. Now, that's a bit of a mouthful, and you're probably wondering, how does that differ to code item 15? And the simplest way that I try to describe it is that code item 15 prohibits you from using a disqualified entity, and code item 16 prevents you from being used by a disqualified entity. So this is when you're helping a disqualified entity provide services. So that's sort of how I try to sort of break down the two distinctions between 15 and 16. The other distinction that we have here is that unlike code item 15, you cannot seek approval from the TPB to enter into such an arrangement. It is strictly prohibited, and there's no other way around it. And that was the intention of government.
Yeah, and you know, if I can just jump in on this one, this is what we often refer to as a tame agent scenario, where agents who have been sanctioned by the board and in particular terminated don't want to stop practicing, so they enter into a deal with an agent with a legitimate business to allow them to keep practicing, but under the shadow of an otherwise legitimate agent.
Yeah, and I think in the past, Peter, we've seen situations where a practitioner will have someone come in through their doors and say, "Can you lodge 100 income tax returns for me? Here are the details." And then really, just taking advantage of that practitioner's access to the ATO online services for agents.
Exactly.
So yeah, you're quite right. That's the conduct we're trying to clamp down on here. So if we look at the elements of code item 16, and again, I'll only talk to the ones which are in contrast to what we've just talked about with code item 15. The first is in relation to, what is an actual arrangement? So it's defined very broadly, and it does include any kind of formal and informal agreements and undertakings that might occur between a tax practitioner as well as that disqualified entity. What constitutes an arrangement does vary, quite a lot, and really it would need to be considered on a case-by-case basis. So it's probably not that easy for us just to highlight, in this case, that's considered arrangement, and in this case, it's not. But we'll try to give a little bit more, guidance in relation to that on the next slide. Yeah.
I think the simplest example is just access to your tax agent number and agent's lodgement portal, really, isn't it?
Yeah, that's the one that we see the most, and it's the one that's very damaging, I think, Peter. As Peter was saying, code item 16 is really about preventing situations where a disqualified entity is actually operating through the registered tax practitioner. And we often refer to this where the disqualified entity is actually the controlling mind, the person pulling all the strings behind the scenes to provide those tax services, albeit through a registered tax practitioner. As Peter said, some of the common examples we see is the use of the practitioner's registered agent number, so that it can log onto the system and then lodge those returns. And often what we see in this case is that the practitioner actually has no involvement in what's being lodged, how it's been determined, etc. Their value lies in their registration number and their access to the ATO systems. The other example, I guess similar to this example, is where we find that a disqualified entity actually prepares all the schedules of the tax returns, and then they give that information to the tax practitioner, who then uses that information to determine the taxpayer's liabilities, obligations, or entitlements. And this behaviour is also prohibited under the Tax Agent Services Act and through this new Code Item 16. Similar to Code Item 15, the point of this code item isn't to prevent arrangements that are administrative in nature only. So those on those peripheral services front that we mentioned earlier. So all the other elements of Code Item 16 we've already talked about before, entity, know or reasonably to know. And so what we might do in the remaining sort of time that we have is to talk about how you can comply with Code Item 16. And if we can say up front, there is absolutely no hard or fast rule. And we'll go through a couple of situations now to see how you would comply with this. So the first situation we have is where a tax practitioner wants to enter into an arrangement with an entity and they don't know if they are actually a disqualified entity. So in this case, what you need to do is undertake those POI checks, seek that written confirmation from that entity that they are not disqualified, and also do a search of our register as well as ASIC's Financial Advisor Register. So this covers off situations where you don't know that entity status. The next situation that we have is where the tax practitioner is already in an arrangement with the entity and they are not a disqualified entity. So similar to what we discussed before, what you need to have in place is a written contract that requires the entity to notify you as a tax practitioner if they ever become disqualified. And in that written contract, there needs to be provisions that allow for you to immediately cease that engagement or that arrangement with that disqualified entity if you find out that they trigger that disqualified entity test. The third situation that we're looking at is where a tax practitioner wants to enter into an arrangement with someone who they know is disqualified. And how you comply with Code Item 16 is very simple here. You can't do it. The conduct is prohibited and you can't seek TBB approval to make that arrangement okay. The fourth situation that we have is where you're already in a current arrangement with with an entity, sorry. So you're the tax practitioner, you're already in an arrangement and you find out that that entity is now disqualified. So, thankfully you've got that written contract in place. So you'll be able to cease that arrangement immediately and you won't be able to seek TBB approval to make that arrangement okay either. So that's a very sort of quick overview there around Code Item 16 and where the board's current thinking is. I might just talk briefly now about some of the obligations that exist on disqualified entities. We've spoken a lot already about your obligations, but to help you comply, there are some obligations that are imposed on disqualified entities as well. From 1 January 2024, disqualified entities must notify the TBB in writing if they are a disqualified entity. And they've got to do this before they renew or agree to extend a contract of employment that they might have with you. Or in the case of Code Item 16, when you're looking at entering into, renewing or extending your arrangement with an entity. So they've got a positive obligation to notify you if they trigger the disqualified entity test. That notification has to occur within 30 days of when that entity becomes aware that they are disqualified. And there are actually penalties that are now in the Tax Agent Services Act if that disqualified entity doesn't give you that notification. So for the TPB, we can apply to the federal court to have civil penalties imposed on that entity. And the penalties that can be imposed are up to 250 penalty units for individuals and 1,250 penalty units for entities. Given that the current penalty unit, one penalty unit, is roughly $300, it can be quite substantial for those entities that have breached their notification requirement option. Now, there are some transitional provisions in place, which we'll just talk about in the next slide. So we mentioned right up front that the board is being pragmatic in how we're approaching your compliance with Code Item 15 and 16. And in addition to that, the legislation is also taking a pragmatic approach by putting in some transitional arrangements in place. These transitional arrangements apply firstly to tax practitioners, yourselves, as well as to those entities that do become disqualified. So in essence, both code items will not apply to tax practitioners between 1 January 2024 and 31 December 2024, so in a 12-month period, unless during that period you're entering into a new arrangement or agreement. So if I can try to make that a little bit more simple, let's say as at today, so what is the date today? I think we're on the 18th, the 19th of December. If Peter is the tax practitioner and he has employed me as at today, my contract is due for renewal in 2 years' time. In that situation, Peter won't be found in breach of the code item 15, if he continues to employ me over the next 12-month period. And that sort of recognises that practices need time to come up to speed and change their arrangements to make them compliant with the Code of Professional Conduct. So there's a bit of leeway there built into the legislation. But as an alternative, if Peter had decided just to engage me on a 6-month contract, so if my contract was due for renewal in June or July of next year, then in that case, Peter will be subject to the code if he continues to engage me after June or July without seeking TPB approval. So there are some transitional provisions in place that hopefully make it a little bit easier for you going forward, particularly over the next 12-month period. So look, with that, we've given you a very quick rundown as to how Code Item 15 and 16 operate. And Peter, if you wouldn't mind maybe just talking through some of the consequences and impacts of not complying with the code.
Thanks, Jeanette. And I've just been trying to keep an eye on some of the chat and the questions as we're going through. And I think those transitional provisions are going to work to make the implementation of the law over the next 12 months a bit easier. So if you're in breach at the moment, you've got some time to clean up your arrangements with employees or contractors. I think what we're really trying to do is make sure that people understand that where practitioners have been seriously sanctioned or terminated in the past, you need to be really careful about having those people work in your practices. And it means, making the right inquiries of your staff about their history and making sure that you have done appropriate proof of identity checks on people so that you know who's in your practice. And if there's any doubt, the TPB is here to help you. We will be publishing guidance as we as we've indicated. Now, the guidance is only in draft form at this stage, so we are participating in these sessions to get feedback and to consult to make sure we try and make the guidance as practical as humanly possible. So in the first instance, I do want to stress that we will be working with you on a case-by-case basis, and our objective will be to get the provisions implemented properly in a cooperative basis at the outset, rather than taking draconian sort of enforcement in the early stages. So let's just all be happy to work together on that basis if we can. As you know, it's important that wrong-minded practitioners are out of the system and that people can be confident in the services that they're getting from their practitioner. And that's what we're going to be working on. But at the end of the day, the sanction regime that's available to us for breaches of Code Items 15 and 16 include a written caution. So, that might happen, when we've worked with you and found out that you've missed the boat on perhaps the transitional provisions. We'd write you a letter that says, look, we note that you've done this, you've tidied it up, so let's make sure we keep everything tidy from here on in. Or it could be a written order. Now, if we were to do that, it might be, look, we've identified that you've got a disqualified entity working in your practice, or that you're working with a disqualified entity. The order would simply be, you're required to stop that arrangement, cease that arrangement straight away. Okay? In a more difficult situation where perhaps there's been a lack of cooperation or some less transparent behaviour from an agent, we might impose a suspension of their registration until such time as they've either remedied the position to our satisfaction, or until such time as we've had an opportunity to complete perhaps a formal investigation and formalise the sanction. Obviously, that last resort there is the termination of registration. A termination and indeed a suspension are only ever going to happen if we have completed a formal investigation where we've given the practitioner an opportunity to engage with us and respond to the allegations. But a termination of your practice would be in a set of circumstances where a practitioner has been determined to engage with disqualified entities and perhaps breached other sections of the code in a way that clearly demonstrates that they don't want to cooperate with the TPB, or that they don't accept the fact that the law has changed and haven't accepted their requirements in relation to disqualified entities. Now, in this sort of situation, some of the other code items might come into play as well, and in particular, Code Item 1, which obligates all registered agents to behave with honesty and integrity, and a deliberate use of disqualified entities in contravention of this new law would really test the idea as to whether you're acting honestly and with integrity. Code Item 7 also relates to ensuring agents' services are provided competently. And one of the things that we find consistently in the terminated agents who will be disqualified entities is often that they haven't met their CPE requirements, or often that they're haven't kept up with legislation and changes in the tax world. And we see a lack of competence, care and attention in the way that they conduct their practices. So those code items become relevant as well to the assessment. So I think if you just, you can see there on the slide, written caution, order, suspension, termination. That's a graduated set of sanctions that build up, and we hope that the terminations are the rarest form of sanction that we use. But we do find ourselves, consistently with a small number of practitioners in a position where it really is necessary to terminate their registration to protect the rest of the profession. So I think I'll leave it there now and pass back to Suzanne to see if there's a Q&A session that we'd like to conduct.
Hi, Peter. It's me, yes. We have had a lot of questions coming through, so I do have some questions for both you and Jeanette. The first one I might put to you, Jeanette. At the beginning of the webinar, you talked about significant breaches. Could you maybe give us a little bit more information about what you would consider a significant breach?
Sure. So in the context of Code Items 15 and 16,
Yes, please.
so
Yes.
in that case, what we're talking about there is whether or not you meet one of the disqualified entity tests, and it's quite specific in the law as to what qualifies as a relevant event. So as I mentioned earlier, it's about being convicted of a serious taxation offence or a serious offence, as well as very prescriptive action that the TPB might have taken. And if I can just extend upon that, we have had quite a few questions, Julie, I've seen in the Q&A around how can an offshore entity be classified as a disqualified entity? And quite realistically, the test is very narrow. It's prescriptive. It says, have they met A, B, C, or D? And in those cases, a similar test would apply to an overseas entity. There is no sort of catch-all provision that says anything else that's considered relevant. So if I can answer that, I guess in a short form, it does not necessarily capture overseas entities.
Great, thanks. You preempted me.
Yeah,
Sorry,
could I
Peter,
just
go.
add to that answer as well? I think, at the TPB, we see that there's a range of emerging issues around the regulation of the tax profession, tax practice. Overseas entities are one of them. Currently, we have limited capacity to regulate offshore entities, but we're clearly aware of it, clearly working with government on those sort of things. So it is on our radar, can I say?
Thanks, Peter. I might ask you the next question, actually, Peter, while I've got you there. I've got Chanda asking, on the topic of disqualified tax agents or BAS agents, can a disqualified person or entity be reinstated by the TPB at all?
So when a practitioner is terminated, generally there's a maximum exclusion period of 5 years, and we will specify in our termination decision how long before that person can reapply, and that period will be specified. If it's the maximum 5-year period, at the end of that period, they're welcome to reapply for registration, but they have to pass all of the tests. They have to have the right educational qualifications. They have to have the right practical experience. And above and beyond all things, they have to be able to demonstrate to the satisfaction of the board that they are a fit and proper person to be a registered tax practitioner, be it a BAS agent or a tax agent.
Thanks, Peter. I know at the beginning of the webinar, you also touched on the annual registration, the changes that are coming up there. We've had quite a lot of questions about that, and I've just got one here that says, how does increasing red tape for registered entities by making registration obligations annual as opposed to every 3 years help with the objectives of the policy change to prevent disqualified entities?
I think there's a really good reason to get into annual registration. And the things that I would say about it simply are that if something lasts for 3 years, it can slip your mind more easily and perhaps be one of those situations where accidentally you let your registration lapse. With a 12-month registration, it's going to be pretty much the same as being a member of a professional association like CPA or IPA or CANS. And you'll get a registration reminder notice from us. You just have to go online to the website, complete a few questions, which will largely be pre-filled. Same sort of thing as you do with the professional association. Advise us of any material changes. Click the button, and pay the annual registration fee, and that'll be it. So our objective is to make it really light touch and easy for people to comply with. And the other thing I would say is that we really want to make this a set of circumstances where you're actively engaged with the TPB, using our website and in touch with us more often than not, making use of our webinar series, all of those sort of things. And finally, if you're currently registered for 3 years, your annual registration won't start until the end of your current 3-year registration, I think is probably how it will be transitioned through. So I think there's a real consciousness on our behalf to make it a light touch for practitioners as they transition over to annual registration.
Thanks, Peter. And just while we're still on this topic, Jeanette, I might just ask you this question here from Sheila. She's just curious as to how annual registration is going to impact CPE requirements and the 90-hour for CPE. I assume that's a BAS agent there.
Yeah, thanks, Sheila, for that question. We're still working through that. Annual registration doesn't kick in until 1 July 2024. And so the board's just working through its policies. Our initial thinking in this regard is that each time you renew your annual registration, bar the 3rd year, you'll have to meet the minimum requirements. So currently it's 20 hours. So let's say you're in annual registration in year 1, you have got to meet 20. In year 2, you've got to at least meet 20. And assume you've met 20 and 20 in those first 2 years. In your 3rd year, you're going to need to have 50 to make sure that you've got 90 hours as a BAS agent. Bearing in mind, tax agents have 120.
Great, thanks for that, Jeanette.
And sorry, Julie, if I can add, I know I'm seeing a lot of questions being asked around annual registration.
Yes.
And that's going to be a webinar that we're going to run in a couple of months' time, I think, once we have some more details ironed out in that regard.
Yep, that's correct. We've got that planned. So definitely recommend that everyone registers and comes along for that session. The next question I've got here is about the approval process. So I've got a question asking, how long will my application for approval to use the services or employer disqualified entity take?
So under the legislation, we've got up to 60 days or a longer period of time that we negotiate with yourself as the tax practitioner. We're hopeful that it won't take anywhere near 60 days, but like this being a new requirement for you, it's a new piece of work for us. So we'll have to wait and see how that goes. And we are looking at, publishing at an appropriate time some service standards to give practitioners a bit of certainty going forward.
Great, thank you. And just another question, just quickly, it's an easy one about annual registration. It's just asking, is there a date fixed for that to actually come into place for all practitioners?
Yeah, it'll commence on 1 July 2024. Again, the government's very mindful of minimising any kind of disruptions and impacts. And so you will be in an annual registration cycle the first time you need to renew your registration from 1 July 2024. So as an example, if you've just renewed your registration on the 1st of June 2024, you will have 3 years from that date. So if I've got it right, June 27 is when you'll move to annual registration.
And Jeanette, would you just comment for people on the charging review? Because I think there's a few questions there about what the fee will be.
Yeah, so the fees are yet to be determined by government. They're currently working through that. But one of the things that the James Review in particular commented on was that, firstly, if we move to annual registration, we need to review the fees to make sure that they're consistent with government policy around charging. So the government's undertaking that review process at the moment, and hoping that by the time we get to the longer term situation, which is post 1 July 2027, there'll be a more equitable fee structure in place that reflects the cost to government to registered tax practitioners. Unfortunately, I don't have anything more solid than that, Peter, but our work is definitely in progress at the moment.
Yeah.
Thank you for that. Peter, I know that you did touch on compliance concerns during the webinar and how the TPB is planning to take a pragmatic approach to that. But I've got a question that's asking, in what will the TPB's initial approach be to dealing with compliance concerns? Is there anything that you can elaborate on in terms of code item 15 and 16 there?
Yeah, I think genuinely our principal concern at the moment is for this new law to be implemented in a way that doesn't have bad impact on the normal, everyday, genuine practitioner. And I think that I've got to say, the question about how long will my application take and the 60-day time limit that we've got, if you're in your practice employing somebody who's been found guilty of a serious tax crime or been a terminated agent for really bad behaviour, it's going to be much harder to approve that application, isn't it? Whereas if you've got somebody who's had a minor sanction, or it's clear, you're able to make an application where it's really clear to us that they're just going to be in an admin role and they won't have any role in the heart of your actual tax practice, it might be easier. But I think, in the first instance, over the first 6 months, what we'll be trying to do is work with the practitioners who have these issues in their practice. If they come to us transparently, we're going to do everything we can to help them out and get through it as quickly as possible. And that said, we're not going to be looking to impose sanctions, I don't think, in that first 6 months. What we're going to be looking to do is sort things out. Where sanctions come into play will be later down the path where it's clear that people are deliberately and in a calculated fashion not wanting to comply with the law. I think for the majority of people in practice, it'll be a pretty easy transition. And we're very focused on not trying to have a difficult impact on your practice through transition to these provisions. But it remains very important that some of these people who've done the wrong thing consistently are out of the system.
Thanks, Peter. I think that's reassuring. Sorry, Jeanette.
Just to Peter's point, we shouldn't lose sight of what this obligation, what the outcome and the goal actually is. It allows for you to determine and assess someone that you're looking to engage. And if they don't have the right skills and qualifications, I would imagine for 100% of practitioners on the line today, you wouldn't want to engage those people unless they've got those sort of extenuating circumstances. So it's a safeguard for you as well.
Can I just also take a minute, Julie, to add? I noticed there's been a few comments or things on the chat about the TPB's focus, and I want the people that have bothered to get online today. Generally, you're not the problem. We're trying to come up with a system that provides a level playing field for the genuine practitioners who do the right thing day in, day out. And these sort of changes are about cleaning out the system so that you're not competing against people who consistently do the wrong thing. So, in your normal day-to-day work, if you're doing the right thing, these sort of provisions aren't going to have a big impact on you. And I think it does, as Jeanette said, help you to focus some questions on potential employees or contractors to make sure you're getting the right ones, not the wrong ones, into your practice.
Thanks, Peter. I think that's a perfect place to leave it for the day. So thank you so much to both you and Jeanette for your insights today and sharing that information on all the new changes that are coming up. As Jeanette said, we will have some more information coming to you in the new year, and we've got a couple of webinars planned early on next year to share some of that information. But in the meantime, I just wanted to share a little bit of information on how you can stay in touch with us at the TPB. So if you would like some more information and to keep up to date, you can always visit our website at tpb.gov.au, and we have just published a whole lot of really useful information on the disqualified entities work as well, and I'll share some of those hyperlinks with you after today so that you can have a look at that information and keep up to date. You can also follow us on LinkedIn, Facebook and Twitter, and we also have a newsletter that goes out each month, which is our TPB e-news, and if you do subscribe to that, you'll receive that every month, and you can do that by jumping on our website at tpb.gov.au/newsroom. You can also subscribe to our YouTube channel, and if you do that, you'll receive notifications when we post new videos, and we do record all of our webinars. So actually we have a comprehensive library available there for you to view at your leisure. And the good news about that is that you can still claim CPE for viewing the videos as well. So that's good. Again, I just want to say a big thank you to Peter and Jeanette for their presentation today. Also, thank you to Daniel and Nadia for their insights as well with answering all of your questions today. You have kept them quite busy, so thank you for that. And yes, we do hope that you have found the webinar beneficial. And as we've said, it does count towards your continuing professional education, and you will receive a certificate for attending today. So just one last thing before we do finish up, I'll be launching an exit survey, and we would really appreciate it if you could take the time to complete it. It's very quick, takes a moment of your time, but it is really useful to us because it gives us ideas on how we need to improve the webinars, but also if there's a topic that you're interested in hearing about, let us know and we will try and get that up and running for you as well. So the survey will just pop up in your browser when you leave today. And once again, thank you so much for joining us. And we do hope that you have a safe and happy holiday season, and join us again next year for some more webinars. And we'll talk to you in February. Thanks, everyone.
Thanks, Julie.